Hello, hello. So today I want to chat about business as usual and really look at it from the Trump prism. And what I mean by that is I had several interesting conversations with global investors. Well, since the inauguration, actually, since actually the elections, because it started in December. And some of the comments that these investors shared with me were very surprising. And it was a recurring thing. It was not just one random person. I had the same comments or the same type of comments for quite some time. And I want to make this edition about this idea of ignoring political reality could be actually the costliest mistake that investor can make, and why this idea of business as usual is a dangerous illusion. So as I mentioned, like since December, well, maybe I should start with that. My name is Peggy van der Plas. Maybe it's the first time watching or listening to my podcast. If it is, thank you for being here. So since the election, since December, I've had multiple, I would say, surreal conversation with global investors, some who were in Europe, some who were in North America. And every time I ask a simple question, which seems quite logical to me, is like, oh, are you adapting your investment thesis or your business model to reflect the new Trump administration? And the answer I got more often than not was, it doesn't change anything. And I'm always like, really? Nothing. Interesting. And and the stance that is really, I would say, unwavering, and it's really expressed with a lot of confidence and even pride, really left me perplexed. Because again, the first time I was like, okay, it's just December. Maybe people have not really seized, like um, the impact that the new Trump administration will have. But I mean, some of the last conversation I had were literally at the beginning of April, so barely 2 weeks ago, and people are, no, I'm not changing anything. I'm like, interesting. And I mean, I can understand that there might be, comfort in declaring yourself above the chaos, maybe some kind of nationalistic defiance, in pretending that the US politics don't really matter and, doesn't matter to capital. But I think there is, like a very dangerous gap between the world as we wish it were and the world as it actually is. And right now, sometimes for people I speak with, not just people who think there is complot and manipulation everywhere, people that you would think are pretty reasonable, well, that gap is widening. And again, North America and Europe, investors that are not at their first rodeo, nonetheless, that idea that there is no impact from the Trump administration on their investment thesis. And, for me, we're not talking about noise here. We're really talking about policy. And since the inauguration, we've seen, and I would argue actually even before the inauguration, we've seen a very tangible shift in US economic policy that is already rippling through global business. Obviously, the Buy America. So the Buy America initiatives are gaining traction. It's not just rhetoric, but like the procurement directives that are pushed affect defense, infrastructure, energy sectors. But it's not just, I would say, what has been enacted, it's also the mindset. You have a lot of US companies that are actually canceling contracts with brands and with suppliers that are not US based, even if they are not obliged to do so with new regulation. So it is not just what has been enacted, it is also now a very different sentiment. So the Buy America, again, goes above and beyond just what is now under special circumstances like defense, for example. Tariff, obviously, the tariff, it's difficult not to take that into consideration. And whether you're looking at the ones who are imposed or proposed, in critical sectors, so pharma, agriculture, semiconductors, automotive, steel. Again, how can you say that it has no impact on your investment thesis? And it's not just that, it is the volatility, it is the uncertainty. So the S&P 500 has dropped over 12% since January. At the time I wrote that newsletter a couple of days ago. That might have changed a little bit. But at one point, it erased more than 5 trillion in market cap. Again, how can you not take that into consideration in your investment thesis? That seems a bit odd to me. And if you look obviously at what's happening on the federal side, all the federal spending priorities are being reshaped and have been already reshaped to some degree with budget cuts that are cutting public sector, like the industries such as like defense, border infrastructure, fossil fuels who receive tailwind. So you have some areas that are being cut, some areas that are being supported. Again, that is impacting the economy, even if you're not directly investing in defense or fossil fuel. There are rippling effects everywhere, obviously, and to claim again that that there is no impact on investment strategy or business operation. I mean, for me, it's really naive, and it's even worse. It's a lack of strategic awareness, and you don't have to be necessarily in public markets. Even in private markets, uncertainty is contagious. Private markets, they don't operate in a vacuum. When macro signals, shift, the pricing becomes harder, whether you're buying, whether you're investing, whether you're selling, whether you're exiting. And that's the thing, is that if there is complexity, uncertainty, volatility in public markets, it is obviously contaminating the private market. So again, volatility, even if not directly market traded, disrupts sentiment. It widens the bid-ask spread, it delays exits, it introduces dots into underwriting, and there are many, many global investors that are now looking twice at allocating fresh capital. They might not be withdrawing capital yet from the US, even if I have seen some of that actually, from a UK pension fund that has reallocated a very significant part of its assets to France actually, due to ESG constraints. But it introduced so much doubt that people are now thinking, well, I'm not sure I want to allocate capital to the US anymore, not just for, philosophy or, political reasons, but just because it becomes quite risky, and volatility, well, that's not really the best friend usually of investors, at least long-term investor traders. That's a different story. And there is a kicker actually in private market, is that redemptions have been rising. So in 2023 alone, US private markets saw an average 25% increase in redemption requests compared to the prior year, compared to 2022. So that means investors want liquidity. But how can you return capital in an environment where exits are slowing, valuations are compressed, and leverage is less accessible? So that is also something that, as private market investors, we need to keep in consideration. And add to that the fact that allocators are rethinking their forward capital plans. And as I said, some are repatriating capital back to the US, and they're also shifting away from perceived policy risk zone. And now the US is a policy risk zone. And I know that a lot of European, and actually not just European, I shouldn't say just that, a lot of global investors have offices in the US, have teams in the US. So they don't really want to start thinking about what does it mean. But that is the reality. It's just that, well, if you're allocating less capital to the US now, well, you don't need that team of 5 people anymore, you know? So it is the type of thinking that is significant. So one line, obviously, I wanted to make, it's like resistance is futile, but adaptation is not. And some institutional investors are responding. They're reallocating into policy-aligned sectors, you know, domestic infrastructure, automation, critical minerals, AI, defense, hybrids. But you also see behind closed doors many resists. You know, they are hoping that the winds will die down, that it's just short term, that the administration will not hurt the economy, that the pendulum will swing back. And I'm like, well, you know, hope is not really a strategy, you know, and pretending that the storm isn't real won't keep your ship afloat, because if it's happening now, okay, maybe it can be calm for 3 months and then it's happening again. You know, like I think once someone showed you, I think that was Mariangelo was saying that once someone showed you who they are, believe them the first time. And we're not even first time around. So I think believing that, oh my God, that's not exactly what's going to happen. I mean, we see what's going to happen, and it's confusion and it is volatility to the extreme. So what does it look to adapt, you know, and what does adaptation actually means right now? So I would say the first thing is, okay, Trump-proof your investments. And this starts with value creation at the core. You know, stress test the business model, rethink go-to-market strategies, reposition for policy resilience, you know, even thinking about worst case scenario, even if today your industry seems shielded, and just don't look at value creation from an angle of a product market fit only. That's not enough now. Reprice political and geographical risk, you know, like you have to stress test your exposure to US-centric regulatory volatility. I know that it seems weird to say something like that, but it is the reality. It needs to be priced in. Now, investing in an asset in the US is riskier than in Canada, than in France, than in the UK. That's the reality now. So that's something that needs to be taken into consideration. Stay liquid and flexible, because you want to build optionality in fund terms and deal structures. You know, I heard our stories of people coming back on deals and saying, well, sue me if you want, because now contracts don't seem to be as solid as they were in the US. So if you're in Canada, you're dealing with the US, well, you know, things can change pretty quickly, and no one's going to come to help you, you know. So that's something to take into consideration. Rethink your timing and targets. So investing or buying a great asset at the wrong moment is still a bad outcome. I'm going to repeat that. A great asset at the wrong moment is still a bad outcome. So, you know, we need again to realize this is the world we're living in now. And of course, investing is looking at the future. It's, you know, it's betting that you will be able to get a return from what you're investing. But I mean, right now, it's a bit difficult to understand exactly what's happening when Canada is discussed as becoming the 51st state of the US, or Denmark to be attacked to give Greenland. And I know people pretend it's not true. It's not true. Well, these are still a topic of conversation I never thought a year ago we would have, you know. So it obviously increases a lot of risk and questioning. And again, I always make the parallel with the rise of Hitler in the 30s. No one ever thought for a second we will get where we got in Europe after the First World War. People were like, no more war, it's done. And they closed their eyes because they didn't want to go in that direction. Closing your eyes is not going to make you immune to the shit show we're in right now. And I think it's nice to be have a lot of bravado, but you also need to be realistic. Like right now we don't have the big end of the stick. So one last thing is, what should you do in terms of strategic adaptation is diversify new capital flow away from the US and this single policy exposure. Look at sectors and markets that are less subject to whiplash type governance. So again, I totally understand that people are not necessarily aligned with the changes that are coming from the Trump administration, but pretending that they don't exist because I don't like Trump. I don't think it's very smart. Like it is not about politics, it is about performance. And if your current strategy assumes that nothing has changed, well, I would argue that everything has already changed for you. You just haven't seen it yet. And again, this is not something about being negative. It has nothing to do with that. It is not about judging Trump one way or whatever. It doesn't matter. It's more this idea of this is where we are right now. And pretending that it has no impacts on business and investment strategy and that it is very short term. I don't think this is a very wise positioning. So thank you so much for listening and watching. You can learn more about me, Peggy Van de Plage, on my website, peggyvandeplage.com. Quite easy. My name is at the bottom, so it's easy to find it, even if my name is not. And don't hesitate to reach out if you have any questions, comments. I'm always interested in hearing people's thoughts. Thank you so much and have a great day. Take care.